Well, the mid-cap index is in the red. The Nifty is up 17 points and 68 points. That move on textile stocks is getting bigger now. You know, the other textile stocks also joining in now, the likes of Garden Silk, I think Wellspun Enterprises, some of these other names also. Arvind, of course, is the one which is gaining, but other stocks also, look at that move on Garden, for example, up about 11% right now. But we have a big global guest joining us now, Bill Maldonado, Global CIO Equities and Asia CIO at HSBC Global Asset Management is with us. Bill, good morning. I hope I got your surname right. Welcome to India. Your thoughts on how the...
You did. Thank you. Good morning.
Good morning. First of all, Happy New Year to you. I think we're talking to you first time this year. So good year wishes to you and your team. Your thoughts on the outlook for 2019?
Yeah, I think we may be moving into a slightly more positive period for global markets, for equities, perhaps especially for emerging markets and Asia. A couple of things that have been big headwinds in 2018, namely the Fed's stance on interest rate hikes and the trade negotiations, are turning a bit more neutral. I mean, perhaps a little bit early to say they're turning into tailwinds, but they're certainly turning a bit more neutral. And I think that will allow the underlying positive characteristics of the market come out. And what I mean by that is that valuations are very cheap, and profitability during this entire very volatile period has actually been improving at kind of a quite significant double-digit rate of growth, which has left us with a very, very attractive market. So if we can turn some of these headwinds even to neutral without a tailwind, we can maybe have a very positive period in the markets.
Bill, good morning. Once again, thank you very much for joining us this morning. You were speaking about a positive period for equities. But if you looked at US per se, the tax advantage that the companies had earlier is not going to be available. There's no incremental advantage coming in. And the second largest economy, China, even without the trade issues, appears to have a slowdown. I mean, it could be their shadow banking problem. It could be years of accumulation of assets in state-owned companies. The two largest economies have inherently reasons to slow down. Doesn't that bother you?
Well, I think we have to get a measure of the degree of slowdown. So don't forget, in 2017 and going into 2018, we had very strong global synchronized growth, way above trend rates of growth, coupled with very, very low inflation. So we had a real Goldilocks period. It was a very, very strong period of time for markets, and we saw the consequences of that in 2017 with very strong asset performances. During 2018 and now into 19, we've seen somewhat of a slowing down and less synchronization globally, and as you quite rightly say, in the two major economies in the world. But putting that into perspective, we're still growing at or around trend rates of growth, still with very low levels of inflation and relatively low levels of interest rates. So I don't think we can get too pessimistic about that. That's still a very, very good environment. And as I say, the underlying fundamentals of markets are actually very strong. Profitability has been increasing at double digits, obviously depending on region and market, but very strong rates. And as the markets have sold off, valuations have got cheaper. So I don't want to get too despondent about a slowdown to trend rates of growth. I don't think that's a negative thing necessarily.
Yeah. Bill, hi, good morning. So what is your investment view for 2019? Which are the top markets to buy into, and where does India feature on that list?
So if we want to back this hypothesis of good growth, moderate inflation, interest rates staying more or less around these levels, then I think the best way to do that globally is through equities, particularly what we would call late cycle markets. So that would be emerging markets, especially Asia. but also developed markets like Europe and Japan, which are kind of further back in the cycle compared to the US. Some credit risk assets also look very good. For instance, Asian investment grade and Asian high yield, we're back up to cycle high spreads and levels of yield. And again, those assets benefit from the good underlying corporate fundamentals. So I think those are the ways that we would like to suggest that we play the environment that we're now facing in 2019. India is a bit more of a mixed bag, let's say. The Indian market is not cheap, but historically it doesn't often get cheap. One explanation for that is that rates of growth of profitability in India tend to be higher than other markets in the region. So it does command a premium. And we're trading at or around, slightly above, the typical level of kind of valuation premium. So I think for international investors, the message is that one needs to be much more selective in India.
Okay.
We've got differences in valuations between cyclicals and defensives, other things like that.
Okay, Bill, from international investors' point of view, politics, how big is that a risk this year for India?
Sorry, say the question again. I didn't catch it.
The political risk. India has general elections this year. You know, a large part of our rally in 2014 was on account of the Modi premium that the market got. And so are international investors worried a bit now?
Sure. Look, everybody is very interested in the election. I think history teaches us that it's very, very difficult, I would say impossible, to invest going into an election in terms of trying to invest views. It's very hard to predict the outcome of the election. It's even harder to predict the market's reaction to the outcome of the election. And in the historical charts, you'll see there's no real long-lasting impact of most elections in the past 20 plus years. So I think as investors what we prefer to do is just get our heads down and focus on the corporate fundamentals and try to find those very cheap but very profitable stocks that are around at the moment, even in India.
Okay. Bill, a little more color on your view of the global investment scene. How do you expect dollar to behave? Do you see a weakness now that Jerome Powell has revealed that he is open to reconsidering both balance sheet contraction and the rate hiking cycle?
So I think that's an interesting part of the jigsaw. In 2017, the other advantage that non-US markets had, especially Asian markets, was that the dollar was pretty stable. It was slightly weak over the period, but it was broadly stable. And we may be entering another phase like that. It's very hard to call for dollar weakness, but it's possible to see how we could get some stability in the currency and perhaps not the appreciation that we experienced during 2018. If indeed that's what happens, I think that would be very positive for equity markets as well. That'll help confidence. It'll certainly help returns for investors, and it's something that I think we may get over this period.
Okay, so just coming back to your view on India, you said it's very case specific, very sector specific. But how are you approaching it? Are there any pockets where you are seeing a pickup? Because a lot of people are now talking about a pickup in capex, a slowdown in consumption. But what have you noticed in India since you are here?
Well, I think that one of the main things that I see that I've been speaking to colleagues about here in India is that there's a very big divergence in terms of valuation between cyclicals and defensives, i.e. cyclicals are still very, very cheap relative to defensives. And at this point in the cycle and with the outlook that we have for markets, it's very difficult to make sense of that. That doesn't stack up. And therefore that creates a very significant opportunity for stock pickers, not necessarily cyclicals right across the board, and it's not necessarily the case that every defensive stock should be avoided. But if you're going to have a bias in your portfolio, it seems to us at the moment that being overweight cyclicals and underweight defensives is one of the major plays that the market is offering.
Okay. Finally, commodities. India is often an algo trade in the opposite side of crude. So we would like to know what's the HSBC view on crude itself. It's given as 86 and 50 in a matter of 8 weeks.
Well, again, we don't have an official view on the level of the crude price at HSBC Asset Management, but we would just observe that there isn't really a very significant imbalance in the global kind of supply-demand dynamics for oil, and therefore the most likely outcome is that we remain kind of range-bound within a reasonably narrow range. And again, that would be very positive, not just for the Indian economy, but I think for a lot of oil-consuming countries around the world.
All right, Bill, thanks a lot for joining us today. It was good talking to you. Have a nice day in India. That's the word from HSBC. Now let's move on. The market is moving higher, and from the low point it's recovered. The Nifty is still up about 5 points. The mid caps are having a bit of a problem today. Stock of the moment for me really is Eicher Motors. Just pull out that stock intraday, because this morning there was fresh negative on Eicher Motors, and it does appear that perhaps right now the market believes that at 20,000 you have priced in the worst of the news. It opened at 20,000, and from there on it's a 700 rupee rally that you have seen on the stock. Ashwini Gujral, Mitesh Thakkar and Sandeep Wagle now join us. Ashwini, your thoughts on first hour of trade and what are your stock calls now?
See, very narrow range day again, so difficult to take a directional view, although some stocks are trying to bat for the bulls, but so basically sticking with those stocks. RIL is a buy with a stop of 1095, target of 1130. HDFC is a buy with a stop of 1980, target of 2040. And HDFC Bank is a buy with a stop of 2100, target of 2145. But one thing should be clear, that if we start to break yesterday's low with any sort of conviction, then the market could get into a bit of a trend, because yesterday was very, very narrow. Today is also very, very narrow. So the market is building up pressure and it will give up one side. So that people should keep on board.
Okay, yeah, actually, it's even flatter for the rupee. The rupee is at the moment exactly where it closed yesterday. And the gyrations have been, 2 pies here and there. So yes, it's extremely flat at this point in time. Ashwini, I just wanted to ask you, TCS, that one's lost 2%. The chart has not been extremely encouraging. Can it head lower?
See, it's almost at the 200-day moving average. Now, often that's considered a support, but this time it's broken down because of news. So maybe, you could have lower levels as well. So if the entire IT space is kind of slowing down, then maybe you could see lower levels, something like 1750 on TCS.
Okay, Mitesh, good morning again. Your thoughts on Eicher Motors, the intraday reversal, and of course your own stock calls, your market move as well?
So, Anuj, to me, I think, as I said, it still looks like more of a pullback in Eicher Motors. I think around 21,000, 21,500, where immediate support resistances kind of kick in, the stock will find a lot of supply. So, not very positive still. There could be some kind of bounce back, but I have 2 sell calls right now, and after a long time, I think it's more of slightly negative bias on the IT stocks. HCL Tech is a sell with a stop at 933, look for targets of 901, and Tata LXI is a sell with a stop at 976, look for targets of 930.
Okay, so sell calls coming in on the IT space. Sandeep Wagle is also here with us. Sandeep, hi. Morning. Would you also be a bit cautious on IT now after TCS's numbers? And if not, what else would you be looking at?
Good morning, Sonia. Yes, the IT space does look weak, but it has already fallen, so I would sell on a bounce back. I have 2 buy calls, a buy in a Biocon, stop loss of 630, target of 655, and a buy in a ITC, stop loss of 290, target of 300.
Okay. Well,